As they say, marry the house, date the rate. For those who are thinking about waiting to buy a house or sell and buy in order for rates to come down, I've got some interesting numbers that I think folks will want to hear to factor into the equation. You could be leaving thousands and thousands of dollars on the table, and it could actually cost you more in the long run. And I'm going to tell you why. I'm going to break down the numbers so you can see and then factor this into your thought process. Now you're probably wondering, how could that be that it's going to cost me more money? Well, first we need to look at what your potential savings are if you wait for a lower rate. So currently rates are in the mid sixes. So let's say 6 to 12 months from now, rates are 0.5% lower. Let's say they're 6%. The average savings on a $500,000 home that you put $100,000 or 20% down, you've got a $400,000 loan principal. The savings of getting a 0.5% lower are around $1,500–1,600 a year. Now that's great. However, let's think about what else happens in the next 6 to 12 months. Well, first, home prices look like they're likely to notch upward. In addition to that, there's also appreciation. Let's say you bought the home. Historically, it's likely to appreciate between 3 and 5% over the course of that year. So now let's break down what those numbers look like. $1,500 in savings by waiting. Let's say you buy the home now. Over the course of that year, if your home appreciates 3% for the value of the home I gave, it's about $15,000 in appreciation. Now you've also got mortgage interest tax deduction to factor in. You're also likely paying more by waiting, so it's kind of a double whammy. And I think it's important that people think about this when they're wanting to wait for lower rates. There's a chance that it's going to cost you more, actually cost you more. You're also going to give up the opportunity cost of the value you're going to gain in appreciation over that time period. And now I know some people are going to say, well, the savings are $1,500 with a 0.5% lower rate. What about the overall cost of the loan over the 30-year term? While that is significant, in the ballpark of $50,000 over the life of the loan by getting a 0.5% lower rate, let's be honest, most people only stay in their home 2 to 5 years, or they refinance in that time period, which is why we have this saying, marry the house, date the rate. And obviously a lot of these details, numbers, rates, etc., depend on what actually happens over the course of 2024. Are rates going to go back up? Are they going to come back down? Are home prices going to stay sideways? Are they going to increase? How much? A lot of that is going to depend on the outlook, which once we get the Fed minutes and see what they're going to do this year, that'll be the end of this month. We'll have a much better sense of if and when we expect rate cuts. We also need to look at the demand picture, but generally we're not expecting a lot of change. We don't expect a huge surge in inventory, which would theoretically bring prices down. We also don't see major rate cuts this year. It could take until close to the end of 2024, 2025 before we may see rates somewhere in the 5% range, or at least below 6%. So a lot of things to factor in, but I think it's important that we engage in this conversation and think about this if buying, selling is at all on your radar for 2024. 2024. So stay tuned for my 2024 outlook, which will be rolling out near the end of the month once we get the bulk of the data.